Cam Brar for Cam's Mortgage Minute on October 22nd, this fine Monday. Hey, I did the home show on the weekend. It was 3 days of being at the home show, chatting with lots and lots of people. And you know what? It's amazing to me how many people approach me, and basically we're talking about the doom and the imminent collapse of the market and how things were so slow. But then when you get to talking to people as well and you kind of make them aware of some of the statistics, they hadn't really done any of the research. They were actually quite surprised when I told them that the overall values haven't changed a whole lot. No doubt in some areas prices have dropped. But then when we sat back and chatted and said, look, you know what, if you took real estate prices from about back in 2007 or sooner and you look at where the prices have gone to, even if they retrace, people are still making money. And most of the people I chatted with that bought houses 5, 7, 8, 10 years ago, they bought them for a lot less than what they're still worth in today's market. So it kind of was an eye-opener to them, realizing that, wait a minute, you know what, I'm still making lots of money on my house. It's not like the market's collapsing all around me. The other thing I found interesting was there was lots of buyers, lots of people I chatted with who were saying, hey, I'm looking at a house, I'm thinking about a house, but we're also talking about that same feeling, that same sentiment that the market was going to collapse. And that got me to thinking, so if enough people just believe in something or follow a trend or read the paper all the time saying, hey, it's going to end, will it end? You know what, economists all have different points of view, but there's no doubt that psychology plays a big part of what we do and the momentum we have. If we're constantly hearing that things are just terrible and they're just absolutely horrible, you know what, nobody wants to get out of bed anymore, and really nobody wants to buy anything anymore. So what should you do? Well, you should look at it and in the sense of whether you need to buy a house or not. If you're in a position where you want to get a house, you're tired of renting, let's say, and you want to get into the market, and it's going to fit for what you want it to be, and a home first and an investment second, then it may be the right time. I mentioned to you this before. I said, you know what, look at a home as a home, not just purely as an investment. The other thing I also found was really interesting is that when I was chatting with people, their expectations and needs seems to have scaled back a bit. Bigger isn't necessarily better. Quite a few of the folks I spoke with were talking about purchasing modest homes and looking within a more tighter budget range, and basically it wasn't like the sky's the limit. So that's a good thing. Hey, you know, it's always positive chatting with people and saying, look, live within your means, have payments within your means. The bottom line is it doesn't matter what your neighbor buys, it doesn't matter what payment they've got or the size of their home. Can you afford the one you're getting? And that's really the key fundamental here. And I ran across an interesting article as well, kind of related to all of this, that was talking about some of the comparisons between where our market's at and could a crash similar to what happened in the United States happened. And there were some interesting statistics that I ran across, and one of them was that at the peak of the market, basically a lot of the American mortgages were in variable mortgages. That's right, there was a lot of debt that was in variable products, and actually 70 to 80% of the debt. But in Canada right now, according to most of the surveys from the Mortgage Association, only about 29% of our mortgages are in variable. So there's very little risk in that sense. The other program the government imposed a little while ago was that if you want to get a mortgage term shorter than 5 years and your mortgage is insured a high ratio mortgage, you had to qualify on the Canadian benchmark rate. So in other words, the mortgages you're getting are for locked in terms longer. So if you couldn't qualify for the higher rate, you would be forced by necessity to take a 5-year or a 10-year or a 7-year term. Which is good because at least you know what your cash flow is going outward over time. So that is one of the key differences that we noted that I ran across that I honestly found quite interesting. Well, I'm going to let this phone ring here for a quick sec. Actually, I'm going to get it. Hold on. Okay, I'm back. I had to answer the call. Yeah, there was somebody right there. They had moved outside of Victoria and moved up to the interior and realized they're not happy there, and now are looking to move back to Victoria and saying, hey, you know what, it may not be a bad time to purchase a house because prices are down. But at the same time, they've got a house to sell, though they're going to sit on, well, their plan is to sit on it and see if they can rent it and do it that way. So, you know what, there is still activity in the market. That's certainly what I discovered from doing the home show, that there is lots of people still looking. They're actively looking. Listings are definitely, talking to realtors out there, there's a handful of listings. The good listings are still selling. Houses that are overpriced, like always, are not selling as quickly or are still sitting on the market. So you know what? At the end of the day, there you go. I mean, is it all going to be doom and gloom? Again, I just read some more economist reports. Some of them are predicting modest drops, 5%, 10%. But nobody is predicting the catastrophic 50% drop like it was in some of the U.S. markets. But again, time will tell. And as I keep harping on you over and over, the next 2-3 months will be really indicative of seeing where the market goes. Do the prices hold? Do they shore up? What happens to listings? Going to be a very interesting time ahead. And I look forward to being part of it and just going along for the ride with all of you. Anyway, it's been Cam for Cam's Mortgage Minute, and I will see you tomorrow.